Our next guest maintains his outperform rating. He has a price target of 240 and says the stock could be weak on headline noise, but he'd be a strong buyer on iPhone and services growth. Here he is, Dan Ives. Always good to see you, Dan. All right, why are you still a buyer? What about the iPhone demand at least seems to have heartened you?
Yeah, well, I think when you look at it, the iPhone demand was actually strong, and even in China, and Cook called that out, even going to the December quarter. Now, China was weak because of Mac, iPad. What I view as more noise, the core, the bread and butter here, iPhone demand looks strong. Now growth's going to return. Services was massive in terms of double-digit growth, and the margin story actually continues to expand. So to me, the fictional narrative that the China iPhone demise was going to start, that's essentially thrown out the window. So that's why, to me, even knee-jerk, because this thing's down because of Mac, FX, iPads, we're strong buyers here. I view it as really more of a table pounder going into the next 6-9 months.
Although I thought analysts were looking for as much as 5% growth for the next quarter. We're not going to get that. Is that a disappointment?
Yeah, and David, to that point, that's really more Mac, iPad, and FX. If you look at actual iPhone units, that's actually in line with expectations. You're actually starting now to see growth. And the most important thing here, as you talk about so much on the show, it's about China. And the China iPhone story that Cook really reiterated last night, that remains firmly strong. And I think that's the important thing relative to Huawei, geopolitical, and many yelling fire in a crowded theater, that the Apple growth story was really in the rearview mirror.
That services number is pretty extraordinary as well. You know, give me a take on $22.3 billion, what that looks like annualized. The margins on that obviously are quite strong, and what kind of multiple, therefore, is deserved.
Well, I think that's really been the key to the re-rating in Apple. You know, many talk for years, right? 12 times is where you buy it, 16 times where you sell it, and continue to be head-scratching to the valuation today. It's the services. I mean, services at one point was worth 150, 200 billion. We view that as 1.4 to 1.5 trillion. That's 100 billion annually, now growing low to mid double digits, margins double the actual hardware business. Services is the key. And that's why, to me, as a bull, I sit here more bullish on Apple than relative 24 hours ago because of services and because that iPhone story has really, if you look at it, it's actually strengthened relative to, I think, some of the fears.
But some of your colleagues or competitors, other analysts, are lowering their target. Citigroup, Davidson, on the guidance.
Yeah, and I think that's one where, look, many have been bearish on Apple for the last, decade or the last few years. So it will play into a narrative. But Sarah, I just continue to focus on, you own this for three things: iPhone, services, gross margin story, and everything else.
But iPhone sales guide is flattish, isn't it?
Well, when you look at iPhone sales, actually growth's going to be there for the December quarter. And now into March, it's going to be up 4 or 5%. I think the whole narrative was iPhone growth hasn't seen growth. Now you actually will see it. And most importantly here is the China story, and Cook talked about it, strong. I mean, a record quarter in terms of mainland China. I just got back from Asia, the last 2 weeks, got back 2 days ago. It's a much different narrative that I'm seeing on the ground there than maybe the perception. I think these numbers reflect that.